Hey gang, this is Mike with my Real Estate Dojo, and I want to explain to you today what is a subject to deal. I know I've done tons of videos explaining how to find motivated sellers, how to find subject to deals, what are the paperwork you have to use, but I realized that I've never done an actual video where I zoom out and help you explain what a subject to deal is. So let me go ahead and define what a subject to deal is. A subject to deal is a creative financing where you're able to step into seller's shoes and take over their house payments and not get a loan and not to use your own credit. Okay? Let me put it another way. A subject to strategy is a creative financing, basically an owner financing. When I say owner financing, there's a variety of different types of owner financing, and subject to is one type of owner financing. Okay? So again, a subject to is a strategy where you buy real estate without your own money, without your own credit, and all you do is step into the seller's shoes and take over the payments of the existing loan or the existing mortgage. Now, when I say that, many people have many different kind of questions like, hey, is subject to legal? Why would a seller want to sell their home subject to? Where do you find subject to deals? Okay. And what type of deals can you get by subject to? And I'm going to go run through all this stuff and explain this stuff to you guys. Okay. The very first thing that I hear all the time is subject to legal. Okay. Right now, today is I believe the 27th. I'm heading to a title company and I'm going to be closing on a subject to deal. Just about 2 weeks ago, I did another deal. And if the subject to was illegal, the title company would not be giving me the cash. Let me tell you about the title companies, guys. Any of you guys understand this, is that when you want to go to a closing and when you want to get the money from the lender, the title company, micromanages you, make sure all the I's and the T's are correct. About 6 months ago, I had a subject to closing and my license was expired. So the title company wouldn't even give me the property or give me my money because my title or my driver license was expired. So I had to go renew my license. So what does that mean to you in a subject to deal? If the subject to strategy was illegal, then the title company would not give me my money. Now, here's another thing I want to show you. This is called a HUD-1. This is a deal that I just done about a couple of weeks ago. And if you look at a HUD-1, line 203, and then line 503, it says buying property subject to. I don't know if you guys can see this, but let me look for it right here. Line 203. There we go, right there. And line 503 says buying property subject to existing mortgage. And this is my HUD-1 that I got a couple of weeks ago where, I made $62,000. And I'll do a quick video about this and fully explain where I made $62,000 selling a subject to property, okay? And that's from equity cash out only. That does not include the monthly cash flow that I got from this property from all the years that I've had it for. So to answer your question number one is subject to legitimate? Is it legal? Well, I just showed you a HUD-1 of a property that I've done subject to, and I've done many other deals. If you look into my YouTube channel, if you look into my Facebook, you get to see that I've done many deals subject to, okay? So to answer your question, is subject to legal? I'm not an attorney, but from the title companies that I've closed all the deals from, it looks like it's very legal. It actually says it on a HUD-1, buying property subject to line 203 or 503, depends if you're looking at the buyers or the sellers section. So if it was illegal, it wouldn't be on a HUD-1, guys. Now, the next question I hear all the time is, why would a seller would want to sell their home subject to? Why would a seller will just allow you just take over their payments? Why would a seller just fork over their social security number to you and their existing loan to you and say, hey, you know what? I'll just let you just take over my payments. Why would a seller do that? Okay, and that's a really, really good question. And when I first got into the business, I had the same exact question as you had. Why would a seller give me their property and give me their social security number and allow me to make payments on them? And I couldn't understand it, okay? And as time went by, I learned what is called a motivated seller, okay? Now, let me define what a motivated seller is. A motivated seller is somebody that must sell their home. And it divides into two categories. You have motivated sellers that are financially in trouble, which means that, for example, they lost their job, or there was a death in the family, or they got a pay cut, okay? They're financially motivated, which means that they don't have the money to take care of that debt service anymore. What does that mean? Is they don't have the money anymore to make the monthly payments on that mortgage anymore. And that's what I call category number 1 of motivated sellers, where they're financially motivated. But there's another category number 2, which is called motivated sellers that are emotionally motivated. These guys are not, they're not having a financial hardship. They're emotionally motivated. A great example is myself. I just had a family dispute. My brother betrayed me, and I wasn't financially motivated, but I was psychologically motivated. And I ended up selling all my properties at a tremendous discount because I just wanted to get out of here, okay? And so I always said that the best deals are the ones that are emotionally motivated, because the guys that are emotionally motivated, they have money, but just don't want to deal with the problem anymore. Let me give you some examples of what emotionally motivated individual may look like. Number 1, somebody has inherited a house. Let's say I live in Florida, my parents live in Dallas, and my parents die and they give me their house. I don't want to drive from Florida all the way back to Dallas to go into my parents' memories, take off the trash, take off all the good stuff and sell it. I don't want to deal with that. So what I could do is just sell it at a deep discount to somebody that's willing to take care of that problem for me. Another emotional motivated situation might be that I've been married, I have money, my ex-wife has money, but we decide to just split apart and we don't want to deal with this house anymore because we're emotionally motivated. So coming back to the story, why would sellers sell you their property and allow you just to take over their monthly payments? Is because there's motivated sellers out there. And motivated sellers are divided into 2 categories: financially motivated and emotionally motivated. And both of these people will give you great deals. If it's 60 cents on a dollar type of deal, or they will just let you take over their house payments in 1 cent, okay? So now we talked about what is it subject to. We talked about, is it legal? And I just showed you the HUD one where, it says subject to, line 203 and 503. And we also talked about why in the hell would a seller sell you and me a property and let me just take over their house payments, is because A, emotional motivation or financial motivation. Now, motivated sellers are in all markets. It doesn't matter if the market is hot like today, there's motivated sellers. Why? People lose their jobs every day. People have death every day. People have divorces every day. So motivated sellers will be in the up market and they will be in the down market, okay? Now, when the market is crashed, like the 2007 fourth quarter, 2008, 2009, there was way more motivated sellers out there than there are today. And I'm not going to argue or disagree with that. But remember this, doesn't matter what the skies look like, there's always going to be motivated sellers in the world because of financial problem or psychological problem. Okay? So my next question is, how do you find motivated sellers? And that's a really good question. I've actually done a video where I've showed you 42 ways to find motivated sellers for free or almost for free. So let me say that one more time. I have a video on my YouTube channel where I showed you 42 ways to find motivated sellers for free or almost free. And I showed you exactly what I've done to find motivated sellers, like this one where I spent just a couple of grand, bought the property, rented it for I don't have the paperwork in front of me, maybe 4 years to 7 years. I babysit it. I deal with all the headaches of renting it out, doing eviction. But end of the day, you can see that I net cashed out $62,000 plus, okay, off one fucking deal. And if you look back at my YouTube channel, you see that every deal that I sold subject to, I made $100,000 per each property in over a 4 to 7 year span. I bought the property in the crash and I sold it in the bubble. So again, the proof is in the pudding. There's the HUD one. I know there's a lot of guys out there that say they made all this money, but they're not willing to show you the HUD ones. You can see my HUD one where I cashed out $62,000 plus off this deal. I'm heading to the title company right now at 12 o'clock, and I'm going to be closing another subject to deal. All right. The next question I hear all the time is, well, Mike, what type of deals can I buy as subject to? And that's a really, really good question. For some reason, many people think that you could only buy subject to if it's foreclosure, like if the people are going to foreclosure, and that's bullshit. There's all kinds of deals you can buy subject to. It doesn't have to be a pre-foreclosure to get a subject to. I already explained. Motivated sellers will willingly deed you the property as long as you learn how to negotiate, structure the deal, and market and talk to sellers. So what type of deals can you buy with a subject to? Guys, you could do what I do. I'm a buy and hold guy. So I buy subject to and I rent them out 4 years, 7 years. When the market goes up, I cash out. You can do fix and flips. So many guys out there spend money marketing and they don't have the money to purchase the property. So they go to a hard money lender paying 18% interest rate, giving them 3 to 6 points, etc. Well, you could buy property subject to and do a fix and flip. In the recession, I wholesaled a couple of properties that were subject to because I'm not a fix and flip guy. I hate managing crews. I hate, getting my hands dirty. I'm a computer guy, okay? So what I did is I got a deal. It was a great deal. It was like 50 cents, 60 cents on the dollar. I negotiated with the seller for him to just let me take over the monthly payments. And then I just wholesaled that deal to another investor that was a fix and flip. So to answer your questions, what type of deals can you do with subject to? You could become landlording. You could do fix and flips. You can do wholesaling, okay? Many people don't understand that you can wholesale subject tos. What that means is you market, you find a motivated seller, you negotiate, you put the deal on the contract, and you just assign your contract to another end investor that's willing to buy and hold, do and fix and flip. Depends on the property and the negotiation. So many people don't understand that you could wholesale subject tos, and I'm here to tell you, you can make good money wholesaling subject tos. You can buy subject tos for rentals. You can buy subject tos for fix and flips. Okay. The other thing you can do with subject tos is what's called owner financing, is where you're becoming like the Federal Reserve, where you're creating money out of nothing. Okay. And the way that works is that, for example, I buy a house subject to from the seller. I turn around and I sell it to an end retail buyer that can't get a loan. Who can I get a loan? Okay. Many people that have their own businesses can't get a loan because, for whatever reasons, the banking institution mafia, they have different criterias. Or people that are self-employed, or people that don't have good credit but they have shitload of money. So what you can do is, for example, buy a property subject to, wrap it around, and owner finances somebody that can't get a loan, and you could make 3 types of profit zones. You could get the down payment, you could get the monthly cash flow, and you could get the end profit. Okay, and how did that works? I have tons of videos that explain to you guys how to structure a deal to get 3 profit zones from a subject to deal. So to summarize it up, you can do subject tos for fix and flips. You can do subject tos for wholesaling. You can do subject tos for being a landlord. You could do subject tos for owner financing. So a subject to is a very, very, very powerful tool, strategy that you can buy houses with none of your own money and without your own credit. And that's so very, very important, because whenever you go to get a bank, let's say from a Bank of America, to buy a house, what the bankers do is 2 things. Number one thing they do is they have you sign what's called DOT, deed of trust, where you pledge the property back to the bank in case you default. So what that means is, if you default and you don't make the payments to the bank's going to come and foreclose on you. So that's the first thing they do. They make you sign what's called DOT, deed of trust. The second thing they do is they make you sign a promissory note, which basically says that if you default, not only is the bank going to come take your collateral, the property, but they're going to come after you personally. They're going to come after your credit. They're going to come and sue you for the deficiency, etc. Okay? So whenever you go to a Bank of America and you get a loan or a mortgage to buy a property, you're basically hanging yourself 2 ways. You're giving a DOT, deed of trust, and you're also going to be pledging your Social Security on a personally note that says you guaranteed to make the payments. Where when you buy a property subject to, you could negotiate, like the way I teach my students, to get a non-recourse loan. And a non-recourse loan says, hey, Mr. Seller or Mr. Lender, that I'm willing to buy your property. I'm willing to take over the payments. But if I default, I'm willing to let you take my collateral, in this case, the house only. But I'm not allowing you to come after me personally. I'm not allowing you to come ruin my credit personally, because I'm not going to sign a promissory note. So it's a very, very powerful strategy to buy real estate, because A, when somebody runs your credit card, your debt to income ratio, or your credit, when they run your credit, your debt to income ratio is clear. You don't have any debt associated with you. Where if you go buy a house traditionally, you get a loan from, let's say, a bank, when somebody runs your credit, they're going to see that you have that loan associated to your debt to income ratio. The strategy, what I teach you how to buy properties with no non-recourse loan, when somebody runs your credit, they're not going to be able to see the debt to income ratio, because you're not taking on that debt, okay? Which is a very, 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 very powerful way to buy properties. So guys, now I explained to you what a subject to is. Simply put, subject to is a owner financing strategy where you buy properties without using your own money, without using your own credit, and all you do is you step into the seller's shoes and you just take over their monthly payment, or you just take over their existing mortgage. I also talked about is illegal, and I just showed you on a HUD-1, which is a government agency paperwork, if you want to say that, where it says line 203 and line 503, buying existing loan, taking subject to. So if it was illegal, it wouldn't be on a HUD-1. Then I also answered the question, why would a seller sell their home subject to? And because they're motivated. And there's two types of motivation. We have financial motivation, and then we have emotional, psychological motivation. And as I already explained, the best deals are in the psychological motivation, just like I was a couple of months ago. Okay? Now, next point I explained to you is how to find motivated sellers so you can find subject to deals. And I have, like I said, on my YouTube channel, I have 42 ways to find motivated sellers for free or almost for free. And I tell you exactly what I've done to find motivated sellers. But I'll give you two of my favorite ways to find subject to deals. The number one way is working the expired MLS leads. Again, that's a gold mine to me. It's like fishing in a barrel. You're working people that try to sell their home that couldn't, and they're probably motivated, okay? Many people tell you to work the foreclosure list. I don't work the foreclosure list. It's just too many people. There's too many dicks. There's too many fishermen fishing at the same pond. I don't work the foreclosure list. There's not enough time. I usually have to fork over so many months in the arrears to cure the loan. I don't like to do that. I like to catch them before they're behind. I like to catch them where they try to sell their home traditionally, they couldn't, and I come in there and I save them. So my favorite way to find subject to deals is to market to expired MLSs. My second best way to find motivated sellers to buy property subject to is driving for dollars. And I like to drive in subdivisions. Like if you're in a Dallas-Fort Worth area, for example, Frisco is a great area for subject to deals, because you have all these builders building homes. They have the phase one. They build these homes, and then they go to phase two, and then they build phase two, and they go phase three. Well, when they finish phase one and they go to phase two, if a home seller wants to sell their home, it's going to be very impossible for them to sell their home, because they're competing with the builders. So phase one gets done, and the builders go to phase two, and then people in the sellers in the phase one want to sell their property, and they're going to have an extremely hard time because they're competing with the builders. What do I mean by that? The builders are providing 10-year warranties, they're providing new paint, new floors, they're providing all these concessions to get the buyer in. Where the seller now is selling a home, but the home, they have lived in it for a few years. It doesn't have the new paint and carpet smell. It doesn't have the warranty, the foundation, all the stuff that you get with a new builder. So when a seller tries to sell a home in a new subdivision, they're going to be extremely in a difficult situation, because they're competing with the builders. And then they're also competing with other people in that subdivision. And what I realized is that in the new areas where you have these cookie cutter homes, there's a lot of great subject to deals if you just drive for dollars, okay? You drive for dollars, you do bandit signs. So my two best ways to find subject to deals is work the expireds and drive and do bandit signs and cookie cutter areas where the home builders are still in that area and they're finishing phase 2, phase 3, phase 4, because the people in phase 1 and phase 2, they may want to sell it. They may have gotten motivated, and when they try to list their home, they're competing with home builders that they're providing warranties and all these great things that the seller cannot do. And what happens is that usually that seller's probably lived in that home for a couple of years. They haven't built enough equity, and they're going to be in a situation where it's a great subject to. Let me add this other thing before I get off, is that many people think that you could only buy subject to if the house has no equity or marginal equity or negative equity. So again, many people think you could only get a subject to if the house has no equity or marginal equity or little equity. And I would say that's kind of like 50% true. The other 50% is not, because I bet a lot of people, and I bought homes from sellers that are willing to give me 50% off the asking price, or 50% what the fair market value is, and they're willing to give it to me subject to. So, as I explained earlier, if you're dealing with motivated sellers that are financially motivated, then you may not be able to get highly equity homes this way. You might only be able to find subject to deals that have marginal equities, 10, 15, 20%, or they have no equity, or they have negative equity, okay? However, if you deal with emotionally motivated sellers, you're going to be able to find motivated sellers that have significant equity but just don't want to deal with the situation no more. Maybe their brother betrayed them like me. Maybe they got into a divorce. Maybe there was a death in the family. Maybe their wife died. And they don't want to deal with that shit no more. And they're willing to just give it to you at a deep discount. And if you're smart enough to negotiate where you don't have to bring the cash, you just take over your existing loan, is a very, very, very powerful way to make a lot of money in America. That's why I say the grass is so green here. So that's pretty much it, guys. I love subject twos. I have my master's degree in subject to. There's many different types of deals out there and different types of investors. There's investors out there that buy HUDs. There's investors that buy REOs. There's investors that buy tax liens. My specialty, that's the only thing I do, is subject to deals, dude, because it's such a great way to put no money down, or just a couple of $1,000s down, own the property, get the deed into your name, and then put renters in there. Let the renters pay off that fucking debt while you're getting all the depreciation, while you're getting all the interest right